Okay, so this is just a quick video on why it's so difficult to trade these markets and why taking quick profits probably is the better strategy than trying to let stocks run. Now, having said that, we did earlier in the week a couple of big runs on stocks, super, low float, hyped up, absolutely, rocketed, and we did extremely well. But they're few and far between. Most of these stocks just don't have follow throughs, and we're seeing that a lot, especially on the swing trades. So let's talk about that in a broader market sense. So at the bottom of the market, at the bottom of the bear market, everything obviously was absolutely crushed and sold off, and we had this bounce. And in here, April 7th, I said, this is, the bear is over. It's going to start to trade. There's going to be a new start of the new bull market. And the best analogy to this trend like this is all boats float in a rising tide. So, you didn't have to be a market whiz to catch the big. We may have some absolutely amazing swing trades in this move here. And why? Because the market, that's what the market did. It just kept going up and up and up. Now, not every stock went up, but and so the trick was to find stocks that could had the potential for these big moves, and then you just let them ride, and away they go. Super big. But then we got this three-wave corrective. And what you'll see in this period here and earlier is this is a common chart. These are just stocks that I have, that I go through and I watch. And look at this. Look at this chart. In a range from 94 to 104, $100 stock moving in a $10 range for 2.5 months. Alcoa sold off. American Airlines, look at this, from July through to end of September. So full 3 months trading sideways. They're either trading sideways or they're one of the 65% of stocks that are below, or 70% of stocks that are below the 40-day moving average, like this. This is a bit different, had a pop, but look at it, just trading sideways. Cannabis stocks soft, below the 50, below the 50. Look at this ADAP. Since June, trading sideways, drifting off, below the 50. AD&T, from the bear market low, did pop, and then from June through to now, just trading sideways. The gold stocks had a bit of a run in the silvers. 2 months of sideways trading, downtrend. 5 months of sideways trading. 5 months of sideways trading. 6 months of sideways trading. Downtrend, below the 40, below the 40, below the 40. It's AMD finally looks like it might be perking back up, and that's not surprising because of the way the SMH looks. But the point being is it's very difficult to trade stocks when they're range bound. Look at this AMD between 74 and 88. $14 range on an $80 stock. Super, so you're not getting the moves in these stocks, and that's what we're talking about. You don't get there's just not participation in the market. All the action was here in the FANG stocks. Huge moves, all of them. You can see from the bear market low resemble the SPY. And that was that's why the market was up so much. But here we see 35% of stocks are above their 40 days, so 65% of stocks are below it. Difficult to trade stocks on the long side when they're when they're so beat up and just not moving anywhere. So if you're struggling with the trading, don't feel bad. You and about 10 million other traders are all in the same boat, where the markets are just not really where they're really just not, there's just no direction for them. They just trade sideways in a narrow range. So what we need to, would be nice, would be if this is the start of this. This is a three-wave corrective, and now we're in the next phase of the bull market. Then we'll have some great trading to come. I'm not sure if that's going to be the case because of coronavirus is put a big dampener on the world and its ability to grow. So you can see why it's so difficult when we talk about why it's difficult to trade. You can see why their stocks trading in narrow ranges or below their moving averages and trending down.